Right now, beneath your feet, there's a pipeline. You can't see it, you can't hear it, but it's moving 2.5 million barrels of oil every single hour, and someone's collecting a toll on every single barrel. Welcome to the pipeline business, where a single pipe buried in the ground generates $500 million a year, where companies own the highways of energy, and where the real money isn't in drilling for oil, it's in charging everyone else to move it. This is a business most people don't even know exists, but it's worth over $1 trillion, and the people who control the pipes control everything. From the family dynasties that own America's energy infrastructure to the private equity firms buying up pipelines like real estate, this is the story of how moving oil became more profitable than finding it. This is the silent business behind oil pipelines. In 1865, they called them the Oil Wars, not fought with guns, but with pipes. The first oil pipeline in America was built in Pennsylvania, just 2 inches wide, 5 miles long, and it changed everything. Before pipelines, oil moved in barrels, on horse-drawn wagons, through mud and snow. It took weeks, it cost a fortune, and teamsters, the wagon drivers, controlled the whole system. They could charge whatever they wanted because there was no alternative. Then, a man named Samuel Van Sickle laid a pipe underground. He pumped oil through it, and suddenly, oil that took 3 weeks to transport was arriving in 3 hours. The teamsters were so threatened, they tried to sabotage the pipeline. They dug it up, cut it, set fires, but it didn't matter. The pipe had already won. Because here's what Van Sickle understood. He wasn't in the oil business, he was in the toll business. He didn't own the oil flowing through his pipe, he just charged everyone who wanted to use it. 25 cents per barrel. Every barrel, every day, whether oil prices went up or down, he got paid. That business model, charging a fee to transport someone else's oil, became the foundation of a trillion-dollar industry, and it's the same model used today. But pipelines didn't just move oil, they created monopolies. Because once you build a pipeline from point A to point B, it's almost impossible for anyone else to compete. You've got the land rights, you've got the infrastructure, you've got the customers locked in. And building a second pipeline right next to yours, that makes no economic sense. So pipelines became natural monopolies, and the people who built them first became unbelievably rich. John D. Rockefeller figured this out early. He didn't just drill for oil, he bought pipelines, lots of them. And once he controlled the pipes, he controlled the entire industry. If you wanted to move your oil, you used his pipes, at his prices, on his terms. By 1880, he controlled 90% of America's oil infrastructure. The government eventually broke up his monopoly, but the business model, that stayed the same. Control the pipes, collect the tolls, print money. Fast forward to today, there are 2.4 million miles of pipelines crisscrossing America, enough to circle the earth 100 times, and they move 70% of the crude oil and petroleum products consumed in the United States. That's 19 million barrels per day, every single day. And here's the beautiful part, if you're a pipeline owner, you get paid per barrel, not per dollar value of oil. So whether oil is $30 a barrel or $130 a barrel, your fee stays the same. Oil prices crash, you still get paid. Oil prices boom, you still get paid. Recession, expansion, war, peace, doesn't matter. The oil has to move, and you own the road. Let's talk numbers. A major pipeline like the Keystone Pipeline moves 600,000 barrels per day. The fee to transport oil through that pipeline? About $5 per barrel. Do the math. That's $3 million per day, $90 million per month, over $1 billion per year from a single pipe. And the operating costs? Surprisingly low. Once a pipeline is built, it mostly runs itself. You need some engineers to monitor pressure, some maintenance workers to fix leaks, electricity to run the pumps, but compared to the revenue, the costs are minimal. Profit margins on pipeline operations? Often 60 to 80%. That's higher than most tech companies. Enbridge, one of the largest pipeline operators in North America, owns 17,000 miles of pipeline. Their annual revenue? Over $50 billion. And they don't drill for a single drop of oil. They just move it. Kinder Morgan operates 83,000 miles of pipeline. They transport about 40% of all natural gas consumed in America. Their market value? Over $40 billion. Again, they don't produce energy. They just own the infrastructure. And here's what makes this even more profitable. These pipelines are regulated as utilities, which means they're allowed to charge rates that guarantee them a specific return on investment, usually 10 to 12% per year. By law. The government literally ensures they make money. So you build a pipeline for $5 billion. The regulators allow you to charge fees that give you a 10% return. That's $500 million per year, guaranteed, for 30 to 50 years. It's like buying a bond that pays 10% interest, except the bond is a physical pipe in the ground, and it lasts for decades. This is why Warren Buffett loves pipelines. In 2020, Berkshire Hathaway bought Dominion Energy's natural gas pipelines for $10 billion. Not because Buffett cares about energy, but because he loves cash flow. Predictable, regulated, government-protected cash flow. And that's exactly what pipelines deliver. But the real money isn't just in transporting oil. It's in owning the strategic choke points, the places where oil has to flow through your pipe because there's no other option. Take the Colonial Pipeline. It runs from Texas to New York. It carries 45% of all gasoline, diesel, and jet fuel consumed on the East Coast. If that pipeline shuts down, gas stations run dry in days, which is exactly what happened in 2021 when hackers hit it with ransomware. Panic buying, gas shortages, prices spiking, all because one pipeline went offline for 6 days. That's market power, and market power is worth billions. Colonial Pipelines owners, a consortium of private equity firms and oil companies, don't disclose revenue, but estimates put it at over $1 billion annually for one pipeline. Or look at the Trans-Alaska Pipeline. It's 800 miles long, moves oil from the Arctic to southern Alaska. When it opened in 1977, it was moving 2 million barrels per day. Today, it's down to about 500,000 barrels per day because Alaskan oil production has declined. But here's the thing, the fees haven't declined. In fact, they've gone up because there's no other way to move that oil. The pipeline owners have total pricing power. And who owns these pipelines? A mix of oil companies, private equity firms, sovereign wealth funds, and pension funds. BP, ExxonMobil, ConocoPhillips, they all own stakes in major pipelines. But increasingly, the biggest owners are financial firms. Brookfield Asset Management, KKR, Blackstone. They've realized that pipelines are infrastructure, and infrastructure is one of the safest, most profitable investments in the world. Private equity firms have poured over $100 billion into energy infrastructure in the past decade. They're not buying oil fields, they're buying the pipes. Because oil fields run dry, but pipes just keep flowing. And there's another layer to this, Master Limited Partnerships, or MLPs. These are special investment structures that own pipelines and pay out most of their cash flow as dividends. And here's the kicker, they don't pay corporate income tax. So investors get high yields, 6% to 10% annually, without the tax hit. This made pipeline MLPs wildly popular with income investors, retirees, pension funds, anyone looking for steady cash flow. At their peak, in 2014, pipeline MLPs were worth over $500 billion. Companies like Enterprise Products Partners, Magellan Midstream, Energy Transfer, they became dividend machines. Buy the stock, collect the checks, year after year. Now, not everything is perfect in pipeline land. There are risks, environmental lawsuits, regulatory changes, accidents. The Keystone XL pipeline was canceled after years of political battles. The Dakota Access pipeline faced massive protests. Pipelines do spill, they do leak, and when they do, the cleanup costs can be enormous. Plus, the energy transition is a real threat. If the world moves away from fossil fuels, demand for oil pipelines will eventually decline. Some investors are worried that pipelines could become stranded assets, billion-dollar pipes that nobody needs anymore. But here's the counter-argument. Oil isn't disappearing tomorrow. Global oil consumption is still around 100 million barrels per day. Even if that declines, it's going to decline slowly, which means pipelines will keep generating cash for decades. And many pipeline companies are pivoting. They're building infrastructure for natural gas, which is cleaner than coal. Some are even exploring hydrogen and carbon capture pipelines. The pipes don't care what's inside them. They just move molecules, and someone has to move those molecules. There's also geopolitics. Pipelines are power. Countries that control pipelines control energy security. Look at Russia. They built pipelines into Europe to lock in long-term customers. When tensions rose, they threatened to shut off the gas. Pipelines became weapons. Or look at China. They're building pipelines from Central Asia to reduce dependence on seaborne oil, which could be blocked in a conflict. He who controls the energy infrastructure controls the future. And this extends to liquefied natural gas, or LNG. You can't pipeline gas across oceans, so it gets liquefied, shipped, and regasified.
But getting it to the coast requires pipelines, and exporting LNG has become a massive business. The U.S. is now one of the largest LNG exporters in the world, and every molecule of that gas flows through a pipeline first. The pipeline owners take their cut before it even leaves the country.
Here's a story that shows just how profitable this business can be. In 2012, Energy Transfer Partners proposed building the Dakota Access Pipeline. Cost, about $3.8 billion. Capacity, 570,000 barrels per day. Fee, around $5 per barrel. That's $2.85 million per day, or over $1 billion per year in revenue. The pipeline would pay for itself in less than 4 years. Then it's pure profit for the next 30 to 50 years. There were protests, legal battles. The Standing Rock Sioux tribe fought to stop it. But in the end, the pipeline got built. It started operating in 2017, and today it's moving oil, generating revenue, making its owners richer, not because they drilled for oil, but because they built the road. And that's the genius of this business. You're not betting on the price of oil, you're betting on the need to move it. As long as oil is consumed somewhere, it has to get there, and that means pipelines. Let's talk about the people who've gotten insanely rich from this. Richard Kinder, the founder of Kinder Morgan. He started the company in 1997, took it public, took it private, took it public again. Today, his net worth is over $7 billion, and he made it all from pipelines. Not drilling, not refining, just moving oil and gas through pipes. Or look at Kelsey Warren, the founder of Energy Transfer. He built a pipeline empire worth over $60 billion. His personal net worth, over $4 billion. He owns ranches, private jets, a lifestyle funded entirely by molecules flowing through steel. These aren't flashy tech billionaires. They don't get magazine covers, but they've built fortunes on infrastructure. Boring, invisible, highly profitable infrastructure. And it's not just individuals. Entire family dynasties have been built on pipelines. The Bass family in Texas, the Hunts, the Kochs. They own stakes in energy infrastructure that generate hundreds of millions in annual income, wealth that compounds across generations, because once you own the pipe, you own the cash flow forever.
Now here's where it gets even more interesting. Pipelines aren't just for oil and gas anymore. There's a growing movement to use pipeline infrastructure for carbon capture. The idea is to capture CO2 from industrial facilities, compress it, and pump it through pipelines to underground storage sites. It's still early, but if carbon capture becomes a real industry, pipeline companies are positioned to dominate it. They already own the rights of way. They already know how to move pressurized gases. They just replace oil with CO2 and charge fees the same way. Some companies are also exploring hydrogen pipelines. Hydrogen is being pushed as a clean fuel for the future, but it has to be transported, and pipelines are the cheapest way to do it. So the same companies that made billions moving oil could make billions moving hydrogen. The infrastructure is flexible. The business model is timeless. Charge a toll, move the product, collect the cash. But let's be honest, this business isn't accessible to regular people. You can't just go out and build a pipeline. The barriers to entry are massive. You need billions in capital. You need government approvals. You need land rights, environmental permits, years of planning, and even then you might face lawsuits and protests. But you can invest in pipeline companies. You can buy shares of Enbridge, Kinder Morgan, Energy Transfer, Enterprise Products Partners. You can get exposure to the cash flow without building the infrastructure yourself. These stocks pay dividends, often high ones, because pipelines generate so much cash that they have to pay it out to shareholders. During the 2020 oil crash, oil prices went negative. Producers were paying people to take oil off their hands, but pipeline companies, they kept collecting their fees because the oil still had to move. Their revenues barely dropped. That's the power of the toll model.
Of course, these investments aren't risk-free. Pipeline stocks can be volatile. Regulatory risk is real. The energy transition is real. But if you believe oil and gas will be part of the energy mix for the next 20 to 30 years, pipelines are one of the safest ways to play it. So here's the bottom line. The oil pipeline business is one of the most quietly profitable industries in the world. It's not sexy, it's not innovative, it doesn't disrupt anything, it's just infrastructure, steel pipes buried underground. But those pipes generate billions in cash flow. They create monopolies, they give their owners pricing power, and they've made families and funds unbelievably wealthy. The people who control the pipes control the flow of energy. And in a world that runs on energy, that's power, real power, the kind that doesn't make headlines but makes fortunes.
So the next time you fill up your tank, think about this. That gasoline didn't just appear at the station. It traveled through a pipeline owned by someone who charged a fee on every gallon. And that fee, multiplied by billions of gallons, is how silent billionaires are made. If this changed how you see energy infrastructure, subscribe, because next time we're investigating the self-storage industry, where people pay $200 a month to store things they'll never use again, and how that became a $50 billion business. The hidden money is everywhere. You just have to know where to look.